What's up, guys? It's on? This thing on? Okay. What's up, guys? Welcome back to another episode of Anything But ASIC. And wow, the news. Wow, woo! Wow. Watching Voss lose his collective mind. Yeah. This is what a bear market does. It exposes all the scams. And in the crypto community, we're used to things moving a lot faster than they would in a financial system where big governments and big banks have a way of kind of sweeping it under the rug for long enough and kicking the can down the road for long enough that nobody notices the change. But things are coming down the line, and they're not looking good. It seems like everybody's going to be holding a big fiat bag at the end of this, and they're not going to like it. But one way or another, the governments are determined that everybody holds their big fiat bags. They are becoming just worthless. But as a side note, it's kind of weird. I went to Safeway the other day, and for some reason, they're not charging taxes on food. It's weird. But anyways. Yeah, just watching this fallout with the whole FTX debacle, it really is a contagion because Celsius taking out Voyager is already gone. I mean, it really started with Voyager, but Celsius taken out now. Now the eyes are on Binance. Now every centralized exchange, even though Binance is bailing people out, which is a sketch on its own face, on the face of things, it's not looking good, but. Did people really think that Bitcoin was going to stay in a bull market the whole time? I mean, come on. Like, how many times do we have to go through this? How many times have even people on the side, that were on the sidelines in 2017, the 20K pump? I mean, they had to have seen it before they got into Bitcoin at least 4 years ago. They had to have heard about it at least. That how it went from 20K and then the news blasted it everywhere that, Bitcoin's crashing again. Like, you have to know by this point that Bitcoin goes up and it goes down because nobody uses Bitcoin in the correct manner. And the correct manner is to take your Bitcoin, take your fiat, put it into Bitcoin, then trade that Bitcoin for services. Yes, if you're a miner, you have to pay an electric bill. Yes, if you're a heavy miner, if we would stop using ASICs that suck down more power than two dryers being on 24/7 just for one ASIC, maybe we'll get somewhere in the crypto mining community, but that doesn't seem to be happening anytime soon. God. Except unless we're like Monero and all these good projects that go unnoticed, like CoinCash and now Avian, that are on par with anything that comes in that's not a CPU. Is basically just not going to work. And also throwing in Dero there, and of course, the beginning, the progenitor. Technically, Bitcoin was progenitor because it was mined on the CPUs, but Monero now with RandomX. Those are good projects that, aside from Monero and Dero, have pretty much gone under the radar for good reason. But those would, if everybody would jump on that train, those would work the bear market, the mining market out so much better than what we have now with ASICs. And we wouldn't have this problem of trying to pay an electric bill at the end of the month or however long you can stretch it out. And the crypto market would flourish. But no, we can't do that. We have to have competition. We have to have all these Chinese manufacturers making big industrial now machines that mine a pretty simple cryptographic algorithm. But that's my rant. I'm ranting now. Let's get into the news because we're gonna read some articles, and like I said, it's not looking bad. For once, the articles are recent. Like only a few hours ago. I guess in crypto terms, that's like a day. But Jerome Poo of the Federal Reserve is they're hiking interest rates. Reading the title, Bitcoin rises briefly as Fed chair promises. He promises more rate hikes. It's coming. I mean, their promises are not worth really much current year, but yeah. I assume that this will happen. But, sell the news, buy the dip. The Federal Reserve may have to keep rate hikes going for longer than previously expected. Jerome Powell, chairman of the Federal Reserve, recently spoke about the future macroeconomic policies and the U.S. inflation at the Brooklyn Institution. As is typical, Bitcoin price was affected by his comments rising by 1% just as the speech began. As of 1813 UDT on Wednesday, Bitcoin traded for $16,780. Sorry. The price then shot up to 16,850 at 1830 when he began to speak. By 1840, the leading crypto asset traded for $16,960. Over the past 3 months, the Federal Reserve has raised its benchmarks interest rates in intervals of 75 basis points at the time. The current rate, according to the Federal Reserve data, is 3.83%. That's a lie. That's all cap. Before the speech, Powell was expected to reinforce his message supporting continual interest rate hikes, which would slow to 50 basis points starting in December. On Wednesday, his message was even more hawkish. We anticipate that ongoing increases will be appropriated, he stated. It seems to me likely that the ultimate level of rates will need to be somewhat higher than thought at the time of the September meeting and the summer of economic projections. Powell noted that the path forward for inflation remains highly uncertain and that there would be more ground to cover in this regard. CPI inflation clocked in at 17.7% as of October, beating economists' expectations at the time. That's in the article. Basically, what it's saying, yeah, there's going to be more inflation. There's going to be more rate hikes. Too bad. But that got Bitcoin rallying. And go look at the markets real quick. And Bitcoin, it's touching 17 again. It pulled all the way up a whole $1,000. Click on it. As the rest of the market's just been piling in. See, we're floating at 16. Oh no, it wasn't 1,000. It's $200. It's up a good 1%. $200. Yeah, or 3% right now, and it's climbing. Let's see the volume on that. 25, 28, 29. The volume is increasing. It's like 29 billion dollars going through. They even managed to spike Tether now. Market's sitting at 900,421. Not 900,000. 900 billion with a B. 421,827,059. Quiet talking. Litecoin was showing strong signs. It looks like it's backing out. All the paper and leverage trading platforms, of course, are spiking. They're all spiking. And it looks like a pretty good green day for at least the crypto market. But where can you go? You can't get out anymore. All the exchanges are solvent. Where can you go? Oh, man. Okay, well, moving on. Talking about insolvent. BlackRock CEO Larry Fink says FTX collapsed because it created its own token. So is Binance next? He's putting the spotlight. The BlackRock himself is putting the spotlight on the Binance, on the CZ. I don't think CZ is gonna like this, but we'll see what happens. It's about to be a billionaire fight here. BlackRock CEO Larry Fink said that the FTX failed because it created its token. FTX downfall has been triggered by a sell-off of its token, which report revealed that it had been over-leveraging. Some analysis feel that Binance's relationship with its own token seems somewhat suspicious. Let's see. BlackRock chief executive spoke about his company's involvement with FTX, Andrew Sorkin, and the New York Times Deal Book Conference. He said that BlackRock had invested $24 million into FTX through a fund it managed before the exchange's collapse. In spite of this fact, Fink declined to say that his company has been defrauded by FTX. We're going to have to wait and see how this all plays out, Fink said. I mean, right now, we can make all the judgment calls. And it looks like there were misbehaviors of major consequences. Okay, that's a weird way to put it. However, the BlackRock chief executive did not hesitate to pinpoint the catalyst of the exchange cataclysmic downfall. FTX fell because it created its own token, Fink said. While he said that many crypto companies would not survive the ensuing fallout, he still believes that blockchain technology underlying cryptocurrencies will play a major role in the future of the global finance. The role of FTT and FTX, while Fink's pithily ascription may strike some as overly simplistic, he is not far off the mark. FTX trouble started last month when the news report revealed that private financial documents of Sam Bankman-Fried Alameda Research, according to the document, nearly all third of the firm's 14.6 billion in assets consisted of FTX tokens, FTT. The report found that it's suspicious that Alameda seemed to be propped up with tokens from a fellow Bankman-Fried entity, Fried. This then led Binance CEO Changpeng Zhao to announce that he would be liquidating the exchange holdings for FTT. Then ensuing sell-off triggered a liquidity crisis for FTX that ultimately led to its bankruptcy and downfall. Some speculate that Binance's own token could lead to a similar fate. Binance Coin causes concerns in recent series of tweets. UTXO analyst Dylan Schlickler expresses skepticism about Binance Coin, BNB. He seemed to think that the token's significant appreciation began recently bugarded belief and reminding him of the recent dangerous precedent. I'm sure that the retail that BNB 10x in 2 months. Same with FTT, right? He said. It definitely wasn't the exchange operator with an incentive to drive up the price of their own token to create a feedback loop of attention, hype in more users. Earlier, Zhao had distinguished BNB token from FTX, saying that Binance did not leverage its own token. Although Leclerc acknowledged this, he said that Binance users clearly do not do the financing cost, which Binance then subsidizes. Recently, another analysis pointed out that a disproportionate amount of Binance SAFU fund, their funds are SAFU, consisted of BNB. Zhao responded saying that the token had merely appreciated faster than its other constituent coins. Constituent coins. Bitcoin and stablecoin Binance Binance USD. According to Leclerc, the appreciation itself is suspected. The outperformance against everything is telling. Hey, you should ask yourself, what is the reason? He said. Who is supporting the market? We know. And they do. They have infinite money. Well, we can call it in the I've already stated plenty of times that CZ has strong ties with his local government, and yeah, if that, I mean, all these centralized exchanges are going to have big ties with their local government because that's what's really funding them. That's what's really letting them prosper the way they are, and what's holding it up. So it wouldn't come to me as a big surprise, but for most people getting into the market, for some reason, they just have the blinders on for so long. I don't know why, but here we are. Surprise. Now, reinforcing that, Black Swan author says Coinbase is worthless, attacking another exchange, centralized exchange. And this one's a little bit older. Once again, I tried to get this out early, but there's been so much so much news after this, so much content to get through. I just haven't been able to get through it. Blackstone author Nassim Taleb is extremely bearish on the stock of the Coinbase exchange. In a recent tweet, Blackstone author Nassim Taleb argues that Coinbase, the largest cryptocurrency company, is worthless. Even if the company industry somehow managed to recover from the worst crisis to date, some companies still has a grisly future, according to a well-known statistician. Back in May, famed short seller Jim Chanos, who made a killing with his earlier bet against Enron, predicted that Coinbase would continue to struggle due to its declining fee revenue. However, it should be noted that Taleb doesn't expect Coinbase to implode in the same dramatic manner as FTX. As reported by AU Today, Coinbase stock collapsed to an all-time low on September 21st after investors' faith in centralized exchanges was dented by the sudden collapse of the second biggest cryptocurrency trading platform. Billionaire Mark Cuban not giving up on crypto. Earlier this week, Dan Dolev, senior analyst at Mizuho Americas, called the Coinbase stock a waste of time after claiming that the company would benefit from the sudden collapse of one of its biggest rivals at the recent research note. Taleb recently opined that the cryptocurrency industry was in the middle of a crisis due to the lack of cash flow. The scientist is convinced that the current crypto sector hasn't actually managed to produce anything remotely useful. Hence, it relies on speculation due to its inability to generate cash flow. Prior to the collapse of FTX, Taleb said that the crypto industry has entered full-blown ice age. Getting icy over here, getting very, very icy. But is it really though? Is this the fabled the bear bounce doing Bitcoin bounce? The Bitcoin bounce. We'll see. But right now, markets are green. It's pulling back up. I don't know. But Streets article: Ethereum rival erodes 41% after crypto project reveals massive altcoin holdings. Now, a lot of people have been going after Ethereum's head for quite some time now, and now that Ethereum's done the big switch, it kind of proves that a lot of its competitors right, such as Lisk and EOS. So, yeah, seeing that this is the way Ethereum has decided to go, it makes sense that once again Ethereum's crown, king of multi-chain, would be up for grabs again, and a primary subject. Reading the article, one crypto project is outperforming most of the markets in the recent rally following an announcement from its key contributors. Andrew Krojé, a prolific developer in the decentralized finance space and architect of the Phantom Foundation, says that the project should be able to run for 30 years without having to sell a single FTM token. In the blog post, Krojé reveals details of the project's financials with a timeline of its development since 2018. According to the DeFi veteran, the Phantom Foundation has turned down multiple partnership offerings, including with Alameda Research, the trading arm now bankrupt crypto exchange FTX. Alameda asked for further cooperation. We pass. That was January 2022. January 14, 2022. An exchange asked us for $300 million for a listing. We passed. May 2022. 50 million in losses, having had treasury in BOO, CRV, YFI, CVX, and ETH. Still 100 million in stables. And NFT exchange asked us 100 million to deploy. We passed. November 2022, over 450 million FTM which was equivalent to more than 100 million in stables, 100 million in crypto assets, 50 million in non-crypto assets, salary burn rate of 7 million per year, we have 30 years left without having to touch FTM. Grunier says that while most layer 1 projects own the majority of their tokens and generate revenue by selling them all, Phantom owned just 3% at launch and 14% today. Bro, that makes you a security. You know the SEC is coming after you, right? Eventually. They're coming to regulate. I gotta get it in. Other than ETH, Phantom is the oldest non-fork L1 with any real TVL. We have been operating for over 4 years. We plan to continue operating for at least another 30. We have a proven track history of technological advancements and delivery. If your entire revenue model is selling your token, you are doing a disservice to yourself, your blockchain, and your supporters. Following this blog post, FTM bounced from the 17 cents range to well about the 24 cents range in less than 2 days for a 41% gain, making it one of the top performers in the crypto markets. At the time of writing, FTM is trading at 23 cents up to 8% in the last 24 hours. So I didn't even know about Phantom. I didn't really get into it, but it seems like they got a pretty good head on their shoulders, head on the project, and it looks like it is going to be the big stick that comes and whacks at least a lot of the other paper trading platforms off the market. It looks that way, but we can never know. We can never tell. Everybody thought, what's the one that just went down that Boss was complaining about? Celsius? Everybody thought Celsius was good. Everybody thought Celsius was stable. Everybody thought BlockFi. That's the one. BlockFi. Everybody thought BlockFi was good, but here we are today, and everybody's crying about they lost all their stuff in BlockFi. For me, I can sit here and criticize and point and laugh because I use cryptocurrency for cryptocurrency. I don't use cryptocurrency to then put it back into the fiat system. But some people will come over here and want to complain when they find this and they hear this and this goes out that, oh, you should laugh at us, it could have been you. No, it wouldn't be me because I did my due diligence and I don't trust scammers. And this is the easiest market to get scammed. I guess the paranoia really plays off. But yes, me being the way I am, not a Bitcoin maxi, but I can see where Bitcoin comes from, where it wants to just do security upgrades and never change. It does keep you away from new technologies emerging, but it does keep you away from scams. And will the crypto market ever advance? Does it need to advance? No, it's cryptocurrency. It doesn't need to advance. It just needs to be like Bitcoin or do a better job than Bitcoin. And that is exchange hands from hands to then have someone offer you something of value or a service. That's it. All this other stuff, all these NFTs, all these meme coins. I get the meme coins kind of. It's just no. There's no need for it. There's no need for it until we get the fundamentals down of actual adoption, actual people trading large amounts of services and things of value, and especially food, electricity, and gas for cryptocurrency, direct cryptocurrency. Like I need to go trade my Litecoin for gas. Then this market has failed. This market is not real. Until that happens, well, technically, what Putin was accepting Bitcoin for barrels of oil. We're getting there. But until that's fully available to the public, the mass public, crypto markets, regular traders, where I can pull out of my core wallet Litecoin and give it to someone, and then they give me gas, we're not doing crypto right. And I'll die on that hill. I'll stand on that hill. I'll die on that hill. And that's the end of my video. That's the end of my rants. I'll see you guys later. Let me know what you think in the comments. Bye.